European stock markets are trading broadly flat, with the UK's FTSE 100 index down just about 2 points at the moment, while the Euro Stoxx 50 index is higher by around about 3 points. In the currency space, very subdued. The dollar is a little firmer against rivals, and when it comes to commodities, gold is ticking a little higher. It slid yesterday and it's recovering some of those losses in the morning session here in Europe on Wednesday. Now, when it comes to other asset classes, peripheral bond yields are a little wider across the board, nothing to be too concerned about. And when it comes to the UK gilt market, interesting moves. We have the 10-year gilt in the UK up over 2.6%. That's the highest level since October 2011. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So today is GDP day across the Eurozone, and that's been the big focus for investors. Stock markets haven't really reacted too much, but we are seeing some strength in the euro on the back of some of the releases that we've had already. Now, the Eurozone's two powerhouses, Germany and France, have come out with numbers this morning for the second quarter. German GDP for the period grew 0.7%. That's better than expected. The number that the market was looking for was 0.6%. So stronger growth, suggesting that Germany may be out of the woods now, and the turmoil in the country is now over. And when it comes to France, again, a much stronger than expected release, coming in around about 0.5% on the quarter versus expectations for about 0.2%. Again, extremely good for France in this particular case. France is a country that's been mired in a recession for previous quarters, and the interesting thing with France is that the president has been very slow to implement the right sort of structural reforms in order to kickstart economic growth. But this is going to be music to the ears of President Hollande in France, and also Angela Merkel in Germany, as she's going to be fighting for a job in the September elections. So good news on the Eurozone side from the powerhouses. Now the real attention is shifting over to the Eurozone periphery, Spain and Italy. Now we know the pace of contraction in both countries has eased, but both countries are still contracting by about 0.1 to 0.2% in the second quarter. Now, if we see a stronger result, then of course we are going to welcome that. But on the whole, it doesn't refrain from the overall picture that's emerging from the Eurozone that the area is now exiting a recession. Growth is going to come in around about 0.1% today for the Eurozone, so it will be technically out of a recession. But when it comes to the overall outlook for the Eurozone, people may not be too optimistic because we will be stagnating for a while. The Eurozone is still going through a massive change, especially with all of these deep structural reforms and austerity measures that are in place now in the peripheral nations such as Greece, Spain, Italy and Portugal, in particular Portugal, which has recently had some political turmoil, but now the coalition government is back trying to repair the mess. Now, other data today that is worth noting is, of course, the UK unemployment figures. Now, last week we had the inflation report from the Bank of England, and the bank tied the unemployment rate to its monetary policy measures, saying that if the unemployment rate, which is currently around about 7.8% in the UK, if it dips below 7%, we are going to see the Bank of England start raising interest rates and maybe ending or reducing the pace of quantitative easing. So when it comes to today's unemployment data, it's not really going to be about how much the UK economy generates jobs. Of course, that is a big aspect of it, but the real kind of change will be, or the big focus will be any sort of change in the unemployment rate. If we see it edge a little lower, investors will be enthused by it, but it's very unlikely, given the fact that the Bank of England expects the unemployment rate to really edge below the 7% mark in about 3 years. 2016 is when they project this to happen, and the UK economy actually needs to generate over 800,000 jobs or so in those next 3 years before we can see the unemployment rate drop below 7%. So it may be a bit of a non-event when it comes to the UK equities market, but for sterling and gilt, we may see a different story emerge from that. Sterling, of course, will react positively if we see strong UK jobs numbers, and of course the gilt market will also react in a similar fashion. Now, gilts are slightly worrying at the moment. UK borrowing costs are rising on the back of that, and that's because investors are somewhat unconvinced that the Bank of England's Governor Mark Carney can really keep a lid on interest rates until 2016, as he set out in his forward guidance. Now, they're projecting that the UK economy doesn't need to see a monetary tightening until 2016, again, which is very similar to how they project their inflation targets and also the unemployment target. But the key point about this is that we are seeing an upswing in the UK economy. Growth is on board, a nascent recovery is in train, and if we do see a solid upswing in the UK in the year ahead or up to, until 2015, investors think that Mr. Carney's going to have to do a bit of a U-turn on his forward guidance and actually start raising interest rates a lot earlier than he set out. So, and that's why we've seen this big reaction in the gilt market. Now, getting away from all of the data, we do also have some comments by the Federal Reserve chief in Atlanta, Mr. Lockhart. Now, he yesterday said in pre-prepared comments that the Federal Reserve should scale back the amount of asset purchases or quantitative easing by the end of the year, but September isn't the lock date for any sort of unwinding of stimulus. It can happen anytime in the next few months until the year ends, so investors shouldn't be too concerned that September is the preset deadline for when we are going to see some tapering. So that should enthuse the market somewhat, especially liquidity junkie investors who are hoping that we're going to see QE stick around a little longer than anticipated. Other than that, not much else going on. So keep your eyes on all those figures out from the Eurozone. We are going to have big headlines that the Eurozone is officially out of a recession, but at the same time, the region itself is still battling with a number of problems, which will keep the growth rate somewhere towards a flat line for the coming years. And when it comes to the UK, of course, unemployment. So I will see you guys tomorrow for another daily market bite. Until then, thanks for watching.